As oil prices continued to rise on the basis of falling inventories, Brent crude closed lower. Oil futures finished Thursday on a mixed note, with U.S. prices building on gains scored a day earlier after data showed an unexpected drop in U.S. crude inventories, but global Brent prices giving back some of its recent climb. Traders also kept close tabs on talks that could return Iran to an international nuclear accord, freeing up oil export. Tensions around Ukraine also remained in focus. Price action: West Texas Intermediate crude for March delivery CL.1 plus 0.17% CL00 plus 0.17% CLH22 plus 0.17% rose 22 cents, or nearly 0.3%, to $89.88 a barrel on the New York Mercantile Exchange. April Brent crude BRN00 minus 0.27%, BRNJ22 minus 0.27%. The global benchmark fell 14 cents, or nearly 0.2%, to $91.41 a barrel on ICE Futures Europe. March natural gas futures NGH22 minus 0.65% fell nearly 1.3% to $3.959 per million British thermal unit. March gasoline RBH22 minus 0.01% rose about 0.5% to $2.665 a gallon, while March heating oil HOH22 minus 0.28% added nearly 0.1% at $2.827 a gallon. Market drivers: the hot inflation report sent the dollar higher, which tentatively dragged down commodities, including oil prices, said Edward Moyer, senior market analyst at Under. However, oil market fundamentals remain very tight, and with no immediate changes to that outlook, crude prices seem poised to go higher. Crude earlier this week pulled back from 7-year highs as investors focused on signs of progress in talks aimed at returning Iran to the nuclear agreement. The Trump administration pulled the U.S. out of the deal in 2018, reimposing sanctions on Iranian crude export. Analysts have estimated Iran could return around 1 million barrels a day of crude to the market within a year of an agreement. But obstacles to a renewed deal remain, and even if an agreement were reached, Iran wouldn't be able to return crude to the market at the stroke of a pen, said Helima Croft, head of global commodity strategy at RBC Capital Markets, in a note. President Joe Biden and King Salman of Saudi Arabia on Tuesday discussed energy supplies and rising fuel prices, as well as developments in the Middle East, in a Wednesday phone call, according to news report. The call is a clear indication that the kingdom will be the principal recipient of American solicitations, given that it is the only country sitting on significant spare capacity, Croft wrote. Traders also kept an eye on developments around Ukraine. Russian troops began joint drills in Belarus, underlining worries about a military buildup near Ukraine that has fueled Western fears of an invasion. Also Thursday, the Organization of the Petroleum Exporting Countries, in its monthly report, left its forecast for oil demand growth in 2022 unchanged at 4.2 million barrels a day. Supply data: the Energy Information Administration reported Thursday that domestic natural gas supplies fell by 222 billion cubic feet for the week ended February the 4th, generally in line with market forecasts. Read how natural gas will play a transition role in the move toward net zero carbon emissions. The data followed an EIA report released Wednesday that showed weekly declines in U.S. crude, gasoline, and distillate supply.